Okay. So this is the learning objective number 5 from the chapter 11. So the objective is to evaluate dividend and earnings performance. Okay, we want to see how the company is doing. Does the company profitable? Are they doing okay? Right? So one way to check the performance is to evaluate dividend and earnings performance. So how do you measure the performance of an organization? Okay, so you could use the dividend record to calculate payout ratio, dividend yield. Okay, this is all the new terminologies, right? What is the payout ratio? What is the dividend yield, right? Those are the questions in your mind. And also earnings. Earnings, right? We all care about our earnings. So what is the earning performance? So what's the basic earnings per share? So for each share you are owning, right? The company owns. What is the earning for that one share? And the return on common shareholders' equity. So shareholders' equity basically is your investment into the company. What is the return of your investment? You invested $100. Every year you only get $1, which is 1%. Or every year you get $20, which is 20%. That's a very sweet investment to get 20%, right? So now let's take a closer look at all these four concepts. What is the payout ratio? So payout ratio measures the percentage of profit distributed in the form of cash dividend to common shares. Okay, so you are doing a division. Okay, if it's called a ratio, right? In English, if you hear people say ratio, right, most of the time it should be representing a division, right? So payout ratio equals the numerator is the cash dividend declared. The denominator is the net income. Okay, so let's say my net income is $100. So my net income from the business is $100. The company declared, let's say $80 dividend. Okay, $80 dividend. So the net income is 100. The cash dividend declared is 80. So what is my payout ratio? My payout ratio is 80% or 0.8. The idea about this issue is if this number is higher, it's better, right? Because with that income, they are going to receive the cash dividend. Okay? Dividend yield. So again, dividend yield is also a division. So the numerator is dividends declared per year. Okay, so the company has declared a dividend on that year, divided by market price per year. Okay, so let's say if dividend declared per share is only $1, but the market price now has increased 10 times, okay, 10 times. So if your dividend declared per share, that's the numerator, okay, let's say that is $2, dividend declared per share, and let's say the market price is $10 per share. So 2 divided by 10, so that's 20%, right? The dividend yield is also just a number, has no unit. So if you are looking for income, okay, so you want to have more dividend income, right? If you are looking for money from the company, you are hoping the company will issue more dividend to you because you are trying to maximize your income. So in that case, the dividend yield, the higher the better. right? Because the higher yield means the company didn't retain any money, right? They gave all the income in the form of dividend to shareholders. So if that's what you're looking for, you rely on the company to live a life. You are hoping to take all the money back out of the company. So then this number, the higher the better, okay? However, if the investor looking for price appreciation, okay, price appreciation, then the lower the better. Why? Because the company, they are making money, right? The company face a decision. Should I give the money to the investor so they can be happy to use it? Or should I keep the money to the corporation and I have a better use of the money? I can use that money to expand my operation to make more money next year. Right? So, okay, so there are two sides, right? If you don't take that dividend, the money will stay in the business and will be reinvested. Okay, so that reinvestment will increase that price of the share, right? You didn't pay any tax, right? The money stay in the corporation, and the price appreciation would look very good. Okay, so if you are going for the money to be given to you right away, higher dividend yield is better. Otherwise, you don't care. I already live on enough money. I don't need extra money from that company, right? Let's keep that dividend income. Let's keep everything in the company, right? So in that case, that company would have a lot of resources. They have better potential, right? They have better future price, right? Does anyone have any question? I just mentioned about the two concepts that are new to you. One is called paid out ratio. The other one is dividend yield. Anyone? Okay, so the calculation is not that hard, right? So in the questions, if you were asked to calculate payout ratio, then just remember this is a division. So you use cash dividend declared divided by net income. That is your payout ratio. For dividend yield, again, it's a division. You use dividend declared per share divided by market price per share. Okay, so if the dividend declared per share is $1 divided by, let's say the market price is $10 per share, so you have a dividend yield of 10%. Okay, anyone have any question? No? Okay. Basic earnings per share. So you are wondering, like, in terms of per share, right? If I'm an investor, I invested 10 shares to the business, right? So I may wonder, okay, so how much earnings per share? Let's say if the per share they earn $1, so I have 10 shares, I'm going to earn, right, $10. So the earnings per share, this one is very useful information, right? It tells you for each shares of ownership, how much earnings they are entitled to. So basically, this one measures the income earned by each common share. So again, the calculation is a division. The numerator is the income available to common shareholders. So you may remember income also available to preferred shareholders, right? But here the definition has nothing to do with preferred share. It's only relevant to the common shareholders. Okay, so the income available to common shareholders divided by weighted average number of common shares. You may wonder, I understand what's the number of common shares, but what do you mean by weighted average? Right? What do you mean by weighted average number of common shares? Okay, we're going to talk about this in the future slides. For now, okay, if this basic earnings per share increase, that's a good news. If last year your basic earning per share is only 50 cents, and this year your basic earnings per share is 80 cents, you should be very happy, right? Because your basic earnings per share has increased substantially. Okay, so that is important. So first, I want to introduce the concept weighted average number of common shares. Okay, so weighted average number of common shares. So basically, they consider the total number of common shares you are holding, and also they considered how long you have held those shares for that year, for that fiscal year. So two things, right? First thing, how many shares do you have? Because we are calculating weighted average number of common shares, right? So first, let's forget about the weighted average. The number of common shares, right? That's the amount of the number of the common shares we are holding, we are owning, right? The weighted average means we consider how much, how many time, how long this holder has been holding these shares. The longer the factor, the weight is higher. If you hold it for 12 months in last year, your weight would be 100%. Okay, if you only hold these preferred shares for 6 months, okay, then the weight will be 6 divided by 12 will be 50%. Okay, so the weight means how long did you hold it? Okay, 100% means you hold it for 12 months, and 50% means you only hold it for 6 months. Okay. In this example, October 1st. So the people start holding these shares, common shares, since October 1st. Okay. My question for you is, what is that weight, right? So then you ask yourself how long that person has held the shares, right? So October 1st. So let me count it. Okay. Look at my hands. October, November 1st. Okay. December 1st, January 1st, which is also December 31st. So there are 3 months. In each year, there are 12 months as a whole year. And in this case, the person hold 3 months of the share. So you have to consider the weight as the amount of time of your holding, which is 3 months, divided by the 1 year, 12 months. Okay, so the weight is a quarter, right? 3/12. Okay, so now let's take a look at the calculation. So on January 1st, you have $100,000 number of shares. So of course you owned it for the whole year. So that the weight would be 12 out of 12, 100%, the fraction of the year. So you own this $100,000 share since January 1st until the end of the year. So you hold it for the whole year. So that weight will be 100%. So that is 100,000. July 1st. Okay, so that's 6 months has passed, right? Since January 1st. So July 1st, you are holding $75,000, 7,500 shares until the end of the year. So how long you have hold it? 6 months. So what is the weight? The weight will be 6 divided by 12. So 75 7,500 times 6 divided by 12. So that is your 3,750. So we follow this logic, this calculation. October 1st, only 3 months holding time. So the factor is 3/12. December 1st, there's only one year, right? Only 1 month, the month of December. The company is holding this share. So it's 1 divided by 12. And this is the time I think the buyback, right? Because all the other actual numbers are positive, but if December 1st, that number is negative. So that means the opposite direction. The company redeemed the share. So then it's pure mice, multiplication, and then just do addition, okay? So we got the weighted average number of shares is 105,750. And the actual number of the common shares is 111,500. Okay, so that is what we mean by weighted average. Does anyone have any question on this? So they are not only counting how many shares has been issued, right? But they also consider, for certain bunch of shares you purchased, how long you have hold it, okay? How long you have hold it. Does anyone have any question on calculating the weighted average number of shares? If you think this is good, give me a sum up. 1, 2, 3. Okay, awesome. Do you guys have any question? No? Okay. So I will move on. So this one is called a return on common shareholders' equity. This measures the company's profitability from the shareholders' viewpoint. So it's calculated also a division. So return on common shareholders' equity equals income available to common shareholders divided by average common holders' equity. Okay. So what is the common shareholders' equity? Well, it's the total shareholders' equity minus legal capital of preferred shares. Okay, so common shareholders' equity equals the total shareholder equity minus the legal capital of preferred shares. So this concludes our 11.5.